The biggest mistake I see people make is over managing their trades. They manage their trades based on psychology, not on technicals, and this can be detrimental to your trading. So in this video, we're going to cover that, how to manage a trade properly, not using fear or losing a trade, which will always be there no matter what position. You've doubled your account, you're in great profits, or you're still not profitable. Losing a trade is never good, but you have to learn to embrace the losses, and you have to learn to be able to manage a trade based on what you see, not what you think. So welcome back, guys. Harry here, known as Trade Sharp. We're going to go over a few examples here with the chart of how to manage a trade properly. And before we do so, can you please help the YouTube algorithm and leave a like? You don't have to, it's always optional, but it always helps the video. And if we can get 100 likes, that would be amazing. And also leave your comments if you want me to reply to them, or if you enjoyed this type of content. For today, if you enjoy this video, I can make a part 2. But for this video, we're going to talk about managing based on more, 15-minute, 30-minute type structure to keep it simple. But if you really like this type of video and find it useful, I can talk about managing on the really low time frames. But then it becomes a bit complicated because, again, like I said in one of my other videos, if you don't know how to trade the daily, how can you trade the 4 hour? If you don't know how to trade the 4 hour, how can you trade the 1 hour? So, you have to learn to trade all the other time frames before you go into the lower time frames, because the more lower time frame you go, you're seeing the more intraday movements, and you're going to see the volatility, and it's going to trick you. So you have to understand it. So let me know if you like this video, and if you want to discuss anything or have any questions, you can join the group and ask me there. So basically, managing a trade. So we all want to, when we enter a position, we always want to win more than we lose. But sometimes, the market doesn't give us the move we want, and we have to secure at 1-to-1. Or sometimes we get, like in the beginning of the week, I managed to catch a nice move here, 80 pips on GJ, which set me up for the whole week, right? So it's like, all right, I've caught that move. I now have, bank to play with, basically. So you have money to play with, and, but some of the time you're not going to get some of those moves, right? You're going to secure at 1-to-1 or 1-to-2, and you want to try manage your trade and not be in a position that is going to lose. But going to break even, or even taking a loss in the beginning of the week, this is another reason. Forget about wins, but if you take a loss in the beginning of the week, the rest of the week you're going to try be conservative. But this is where you go wrong, because you're like, I don't have money to play with. I'm gonna move to break even because I don't want to take another loss. And then what it does, hits you at break even, and then goes straight to your take profit. This is all based on psychology. This is not based on technicals. So when you're trading, you have to really base your trades based on technicals, not psychology, when to manage a trade. So the first instance when to manage a trade is when you understand what is going on in the market technically. So this is an example of a position I actually took. Wait, let me remove this. So this is a position I actually took here, and it was not the best position, but it's the option I saw, so I gave it a shot. So I saw this area we were in here. We obviously created a range. Buys from this bottom of the range were beautiful, and I should have been in from here once I saw price break above this zone, but I wasn't at the chart. So unfortunately, when I came to the chart, I saw price find this resistance here and create higher support. So I said, okay, high chance we should at least come to test this zone eventually. So I'm going to give it a shot to see what happens. I know it's a risky shot because remember, guys, if you guys watch my video, you know where we're trading on GJ, right? GJ is going like a rocket, and it's very risky buying into the highs here because you don't know if it's going to be continuation range or pullback, right? Because we don't have targets here, but what we do know is that we're in bullish pressure. So trying to sell GJ, you're trying to call tops, which is a career-ending move possibly, and I do know people who have lost a lot of money trying to call tops. So don't try call a top, and don't try catch bottoms unless it's technical reasons like 149. So fact is that I know a lot of you institutional traders are going to be like, man, you're buying here, you're going to be asked to get stopped hunt, you should be entering after blah blah blah. Fact is, I don't trade institutional. I'm looking at price action. I could have been in buys from 149, but that's not how I trade. So I've been looking at GJ, and you can rewind in the back of my analysis videos and see when I'm talking about GJ in 150, 151, 149, I'm talking about buys on GJ. But that's not the point, right? I can flex that you know, that's not how I trade. I look to get from one point to another point and be done, because that's where consistency is. If you're taking these institutional trades, holding for 3-4 days, and then it comes back to break even, and then you say it's manipulation, I mean, you know, this is the problem, you know. So my point is, come in the market and make a consistency in the market, right? So that's what you'll understand long term, because when you have a job, you have a consistent salary. Trading is not consistent, and if you can find somewhere where you don't have to worry about holding a position for a long time, then it's fine. So this is the option I saw when I came to the market, right? And this is the point, when I came to the market, not when the market created the option. When I came to the market, this is the option I saw. So I took an entry here, and my stops were below this structure here, because I know if it was breaking this, I'm gonna be wrong. And I actually just took like a 3-pip loss instead of taking the full loss. And this is one of the very few times I actually manage a trade. Most of the times I just let it hit my stop loss, because where is my stop loss placed? And this is very important. I'm probably going to put it in writing here. Your stop loss should be placed where you go wrong. So closing before then does not make sense. Why should you close the trade if your stop loss is in a place where you're going wrong? So that means you're probably over risking, or you're scared to lose. But if you're putting a stop loss in a place where you go wrong, then you should be fine, right? Because then the trade doesn't make sense, and it is what it is. So once you start getting consistency and you have data on your trades, right? So once you start having information on your trades, and you know, a lot of information on your trades based on your consistency, then you can start taking positions. This was an optimistic entry to see what happens, right? I didn't mind taking a 3-4 pip loss, because if we got another move like this, the continuation from yesterday, you'll be laughing, right? But it's worth to take a shot. And a 3-pip loss, hey, it's not really something a big deal, to be honest. But basically, I saw price continue up into this point here, and if we go rewind, let me just show you how this looks at the time. It looks nice at the time, right? So if you came to the chart and you're like, okay, yeah, I'm taking this. We see what happens if we get to this resistance. 1-to-1 here, make a decision. Go next bar. All right, fine. Looking good. Yep, still good. No issues. Okay, good. Looks like we have some continuation, finding support above my entry. Now what happens? Okay, bearish closed. I'm not worried. At this point, after this candle, most people would have gone to break even. Oh, look, we created a support above the entry. Go break even. Boom. This takes you up, break even. Then you probably see the next candle continue. But in this instance, we didn't have that. And I managed to close the trade early. Why? Because of this one candle here. This one candle here, I actually entered a bit earlier, somewhere like that. This candle here actually ended up closing in the range. So I know based on my backtesting and data that if price is closing back in the range, buying at a high. So understand where we are in the market. If we were somewhere at a low point, I would say, okay, this is okay. We probably find support somewhere here and continue up. But I'm very aware that this rejection can be a harsh rejection to the downside, and possibly could be a reversal because of where we are in the market. But price closing back in the range, I said I'm going to be done with the trade. If it continued up, I would be happy, but I know most of the time when price is not creating support and closing above the range, below the range, that's it. Price should continue down. And at that point, even the 1 hour candle was closing bearish. 1 hour candle closing bearish with a long wick liquidity grab from the upside. It's not looking good. You're probably going to get a downside move. Yes, it can create support above this zone, but then I rather look for secondary buys, right? But buying in this range is always going to be deadly, and you can see what ends up happening. Boom, drives down, would have hit your stops fully, and then, you know, boom, comes and gives you one of these huge liquidity grab to the downside. And of course, what does it do? The buys come later on, creates support at the bottom of the range on lower time frames, right around here. And you can see, then what is it going to do? Well, your TP is going to be here. So now if you're taking a trade on lower time frames, such as this 5-minute structure change here, breaking these highs, your stop loss can go below this area here. Shouldn't really need to tap that wick after these two structures are made. Now, where are you going to target? You're going to target these highs here. You're not going to target the ultimate highs. You're going to target because that's your most recent target. You can see eventually, boom, boom, taps your target and you'll be out of the trade. So it pulled back deeper than actually expected. But when would you go break even on this trade? Because if you went break even entering somewhere around this point, these candles would have probably taken you out. At this point, I wouldn't go break even, because if my stop loss, let's say, was below, let's say I took an entry somewhere in here and my stop loss was below this area here, and I was targeting here, I know that I'm wrong if it hits my stop loss. So in a position like this, I'm not going to go break even. The only chance I will close the trade is if I see a candle closing outside this zone. Oops, wrong tool. If I see a candle closing outside this box here like this, then I'm gonna go and close the trade, because I know that this is a strong support, and if we're getting a candle close below, I just close the trade because I'm wrong and I don't like that. So now let's talk about, to wrap up this video, when to move to break even, right? So let's see when to move to break even. The point when you should move to break even is when you understand where you are in the market, right? So if we're at a point like this, right, where we see price given a deep pullback here, okay, and this is your new range here, and this is your lows. The obvious position here, the best position, is going to be taking this once we see price close above that resistance to tap this and essentially get continuation. If you're looking for the trade to the top of the range, you would be done. You won't need to go break even because there's no structure. If you started seeing structure form like this on the 15-minute, now you can go to break even at this point, because you know, okay, if price is going to, and be careful, don't make sure that this structure is not close to your entry, because what you can get is you can get a wick, but price still closes back in your range, right? Similar to this, you get a wick, but it doesn't break the structure. Structure is still respected. So make sure you don't get that. But if it's not too close to your entry, you know any candle closing below this structure, it'll probably come down and tap you at break even. So that is the point when you move to break even based on the technicals you see, right? At this point at the top of the range, you can secure profits now at the top of the range. And now you can look for structure to be made. At this point, you can go to basically this little, you can go to take maybe a little bit of a loss here if you secure at this point here, because what this could easily do is it could come back to your entry, because your entry is at the support zone. You have to remember, find support and then continue up, and you'll still be right. But since you've secured at this top of the range, you're not going to lose, because you've gained 30 pips here, and if you move your stop loss a little bit up, you're only risking 6, 7, so you're still going to make 25 pips in profit. So that's how you start to manage a trade, and you can actually get really complicated once we start going onto lower time frames. As you can see, the structure starts to form. So this is when you can start. But if you want part 2, I'll explain how to manage on lower time frames like that. Then once we see these bigger structures start to form, let's start removing all these drawings. So once we see these bigger structures start to form like this above the range, your stop loss can be moved below here, and then you start trailing your stop loss until you get stopped out. And that's how you catch the runners. But ideally, you should have a good target. Probably I would have closed full at this point here, 164,500. I think that would have been a great point to close, and I wouldn't catch this, but that doesn't matter because you have a solid plan and a target. That's basically it. It's a very simple video of how not to overmanage, and understand that you don't have to always manage your trades. Let it hit stop loss, because that's when you're wrong, and that's what I mostly do most of the time. When I'm wrong. I let it hit stop loss, I move on, because in the long term, based on my data and my analysis, I should be right more than I'm wrong. Otherwise, you wouldn't be a profitable trader. So that being said, take care, trade sharp, and until next time, peace.